Hey guys, it's TWETV here, and today I brought to you another video. Now, this video is gonna hop into kind of the psychology, I guess the mindset behind, when you go through your weekly process, however many trades you decide to take, which in this case, this is NAS 100 or US 100 or NASDAQ, whatever you want to call it, because it depends on for broker to broker. Now, with that being said, I want to go ahead and break down my weekly process with NAS 100. So let me go ahead and hop into a lower time frame, right? Because throughout the week on NAS 100, it wasn't exactly a hit or miss, but it was a lot of unexpected reaction, a lot of things that I necessarily did not expect to happen, and it kind of threw me off. And I just wanted to show you guys that it can literally happen to anyone. So what we got here is constant demand being respected, right? So that indicates order flow. Remember, guys, what do I always preach? Try to find the order flow. And right here is a perfect example. I actually took a sell on this reaction here. And this was me kind of going against my rules. Honestly, that was the biggest thing. You're probably asking, what rules did I ideally go against? Well, number one, it's building order flow. Find the order flow. Yes, that is 100% true, but do not discount that idea that order flow can sometimes be used as liquidity. That's the biggest thing that we have to realize. Now, in this case, it looks like a perfect setup with, demands constantly being respected and it's reacting to the supplies and blowing through them. That is correct. But we have to remember where we are in the market cycle, right? We're in a 15-minute POI. Now, I did narrow down some mini POIs. As you could see, I narrowed down like a 5-minute. But that is something for me to pay really close attention to. And at this moment, this trade, I didn't exactly pay attention to it as much as I should have. And I just looked at it as, oh, here's an opportunity for a quick scalp. So what am I getting at here? Don't be afraid to hop around through different time frames. Do not stick to one time frame. And in this case, that's exactly what I did. And yes, it looked pretty decent. It was a pretty decent startup. Yes, it was going pretty good. I mean, some people, they're okay with that kind of scalp, By all means, if that's what you're aiming for, then go ahead. But me, I was aiming for a little bit more. I was looking for, a greater return on my investment here. I was aiming for that higher time frame POI to the upside there. And as we can see, it's reacting to that 15-minute POI, narrowed down 5-minute POI. And in this case, I moved my stop loss to break even because it just sweeps that previous high, right? And now I'm looking at it as like, oh, wow, we got a reaction here. In this case, I would say you could take a trade off of that, but that's when you're kind of gambling, in my opinion, which, I look at it as like if you had your whole heart set on one specific bias, like a buy or a long, whatever you want to call it, or if it's a sell or a short, don't go back and forth hedging. In my opinion, that is probably the worst thing you can do because now you're guessing. So in this case, what I decided to do is take a step back, realize my mistake, right? I look at it as like, okay, it's used as liquidity. It got swept. All right, tap that POI, that 1 minute demand that I was looking at. Okay, it reacted to it. Now it's hopping into a lower demand that hasn't had a reaction yet. And I'm looking at it as like, okay, ideally, from a market structure standpoint, this could work. But let me collect data. Like previously, I didn't really collect data. I just took a trade off of the data. Now, in this case, I have a supply that it reacted to, a demand. Now it's creating a little bit of supply here, right? It's reacting to that little demand there. Beautiful. Reacts to that supply. So I collect the data and I'm using this new data here to find an entry. Now, ideally after that previous break even there, I will most likely take a smaller risk. So ideally, I usually risk 1% per trade. But in a case like this, I would probably cut it in half. So half of 1%. Now, this is a decent trade. It is. Perfect. Awesome. Now, another thing too is, yes, even though it looks great and glamorous, it doesn't necessarily mean it's going to 100% go in your favor. You got to play it safe. So I highly suggest people to take partials as much as you can. I mean, obviously, if, respectfully, it is a good place to take partials. Now, in this case, this is another thing that I didn't ideally realize when I was, trading this day. I didn't really pay too much attention on this fair value gap, imbalance, gap, whatever you want to call it. There's so many different forms of terminology for what this is, but let's just go with imbalance or fair value gap because that's the most well known. I see that there's a reaction to it. Now, in a case like this, you should be taking out 80%. You should have no more than 20% left in this trade if you start to find a reaction in a reasonable POI, because ideally when you find an imbalance or a fair value gap near a POI, it's most likely authentic. It's most likely going to be traded off of, because ideally when you find them together, that's where it's going to be the most powerful POI you can find, at least in this case. In this case, it reacts to it, but I'm looking at it as like, okay, we have a lot of different POIs resting below here. So my thought process on this was like, okay, maybe aiming for that high of a TP wasn't going to ideally 100% work out at the time. So I decided to, once I saw a little bit of a reaction there, I didn't take a trade off of it, but I decided to take majority of my trade out. And as soon as I saw it was pulling down a little bit more, I not hard TP, but I got out. I guess that'll probably be the best way of saying it. Now, in this case, I always tell people, okay, we had one break even, one trade that we were profitable, yes, but not exactly where I want it to get to. That is something that I do heavily pay attention to. I want to make sure that it's, dabbing into my POIs that I point out, and okay, we see that it taps into that 1 minute POI. Perfect. Now, in this situation here, I'm looking for reactions, but my target is I'm looking for a sweep of that high. I would love for it to tap into that POI that was resting above, but we got to pay attention to what exactly is a little bit of our entry model here, right? I also noticed that, this didn't really tap into that higher time frame POI here, so it's just tapping into it now. So what does that tell me? That tells me that it's mitigating all of these zones to get ready for the big move. That's ideally what it's telling me. How I look at it is when the market mitigates a lot of zones, it's trying to kick out either the buyers or sellers, or some people like to call it like it's sweeping all of liquidity, so that when it wants to make its big move, it has less resistance. I'm not talking about resistance and support, but what I am talking about is resistance to the actual idea. So if they want to look for a big short here, let's say the institutions want to look for a big short, if they can kick out as many of the buyers as possible, then that would make this short a lot easier and a lot more appealing to them. All right, now what exactly do we notice here? We have a sweep, right? And we have constant order flow. Supply is being respected. Demand is reacting, but it is getting blown through, meaning supply is in control. Yes, find order flow, but in this case, you need to find what's appropriate, right? Who is in control? That is the biggest question. So with all that being said, that is what you can ideally call an entry model, right? This is a slam dunk. It already mitigated that one zone, so it's going to blow through it. Now it reacts to that 5 minute zone, but obviously, like how I said, this was the big move, so it's probably going to hit that 15-minute zone. So we're kind of playing it from 15-minute zone to 15-minute zone. Yes, it's reacted to 1-minute POI. It's beautiful. Now, that is one slam dunk there. Yes, perfect. But we do have to realize the two previous trades that we had. There were long biases. We have to pay attention to that. We have to understand, where did we make the mistake? That's the biggest thing that separates the small percentage of traders that actually become profitable in this game. A lot of the time, when people, or at least traders, have this mentality of like, okay, that was a mistake, maybe the market's just not going my way. No, there's a reaction, and there's always a reason. There's always a reason for everything. So the biggest thing you have to figure out is, why did it go that direction? Why didn't it go in my favor? That's where you really, really start to grow. And in this case, let's say it aimed for that 15-minute POI. Awesome. Great. Had a great reaction to it. Now, if let's say we're looking for a big swing trade, well, we could have aimed for that, POI at the lower end there. But that's where greed comes in place, because this was news. If we pay attention to, let's say, my FX books, whatever news outlet you want to look at. I mean, there's so many out there. But in this case, it would have stopped us out if, let's say, we got that greedy, or, hit us out at break even, But, all right, hit this higher time frame POI. What are we looking for? The same thing. It tapped into a 15-minute POI, so we're going to go along with that 15-minute POI. Don't look for a short when it's a 15-minute demand. It's not the brightest thing to do. So in this case, we have a supply. I mean, yeah, you can narrow it down. I kind of narrowed it down here. Looks pretty simple to understand. It reacted to it, then blew through it, coming back to a demand. Awesome. Great. That's what we want to look for. Reacts to it. Then it taps into that supply, reacts to it aggressively. That's an amazing thing to see. Then it blows through it, creates a demand, taps right into it while it's wicking out the previous high. So right there, that's a slam dunk. That's what the kind of trades we need to be looking for. And, it continuously plays around. I mean, we could aim for that 15-minute high up there. We can. And, I tell people, you could do something like that, but don't get greedy. My biggest thing is figure out what is your ideal percentage gain. Don't look at the money. Look at the percentage gain that you want to have by the end of the month. Now, once you determine that, try to figure out, by breaking it down to numbers, how much you should risk per trade and what frequency of trades you should be having throughout the week and month. Yeah, if you need any additional help, my Discord link is in my bio, and along with my boot camp. And as always, guys, stay profitable.